Keckstead from Forex Trading Unlocked today on February the 25th, 2020, and we are here for a daily Forex market analysis and live trading examples. Just to remind you, real quick, we're going to pull up our disclaimer to let you know that this is all just for illustrative purposes only, just for educational purposes. And with that, we're going to jump to our live screen. And we have the www.forex-trading-unlocked.com website pulled up already with the workstation page. And by the way, when you're on our website, anytime you want to tweet it or Pinterest it or whatever, don't be shy over here. But we're going to turn that off right now. All right, so now what we're going to do, we're going to skip over the numbers. Oh, by the way, we do have the consumer confidence number today for the U.S. dollar. And let's see. All right, we are starting out today with the U.S. dollar Swiss, which a couple sessions back on Friday, boy, did that give us a nice little sell signal indication there with a bearish engulfing line. The question is it going to become reality? Is the technical trade going to manifest completely? It did go down. It probed new or move lows the following day, but not by much. And even today it tried to again. But this trade seems to be running out of gas. It could be most likely because of the coronavirus issue that is now exploding in Europe. So here's our pivots here that we're looking for. Any rally above 98.48 confirms dollar strength, and this bull will be running up most likely towards this 99 half cent area up in here. Parity is something that the dollar has had a lot of challenges with the Swiss. And the Swiss is a bull versus most currencies. However, Switzerland isn't that far from Italy. So, and with what's going on right now in Europe, this is we'll see how it goes. Hopefully it's contained and everything will be dealt with in a very quick fashion and everything will be subsiding. But right now, the fundamentals of the coronavirus are starting to hit home in Europe, and it's definitely weighing on the Swiss. However, as you can see, obviously the Swiss has been gaining strength versus the dollar, and that most likely could be because of this flight to quality now that if the euro does not gain strength, or if this does start to become a true pandemic and stuff, remember that the Swiss is a flight to quality currency, and it has had a nice correction versus the dollar, and it was initially a bull. So it's just that we've been in a long-term neutral to higher trade with the dollar versus the Swiss since the beginning of the year. We did have this reverse head and shoulders pattern that was executed, and we started to come up towards our target range, and our target range still is up to around 99 cents to 99.5, and a failure then most likely if bullish strength really truly is still in the Swiss franc. But that remains to be seen. So right now we are looking at a corrective move. This market has been trending higher for basically over a month. So, and right now we just recently made a higher move high. Our sell signal here does have us going down below this 97.39 pivot and targeting right around just below this 97 cent area. The big question here is if this is just a corrective move here before we have the bullish continuation of this trend, or is this sell signal going to trigger off a neutral to lower bias once again in the U.S. dollar Swiss? That's why this last swing low here, higher move low, is a key level at 97.39. Any failure from here would be an indication that this market really does not want to stay bullish, even if the dollar is strong. And remember, the dollar bull that's been going on because of this virus trade maybe overextended as well. Just because the virus keeps on growing doesn't mean the dollar bull keeps on growing. It just means that it may be supporting the dollar versus a lot of currencies, but it doesn't mean that you're not going to start to see free-flowing action, because we don't know how the results are going to be. We have to see how other countries are impacted by this. So we do know in the Middle East that the trade is that things are really going to become overseen with a microscope right now, because we don't know how fast things are going to spread there, because there's a really big disconnect for the pockets of where it's starting to pop around. All right, so that being said, we already have our levels here at 98.48 and 97.39. It's actually not that big of a range here. So for range traders, I think you got kind of a good area. You can see the range from yesterday. We're kind of hovering in this little area right around 98 even down to about 97.75. Not a lot of action there, but that's also kind of the consolidation area too. It happened over here as well, so it's not unlikely that we can go sideways also with this market. Remember, the Swiss is a bull, so maybe if the dollar is strong versus other currencies, if the Swiss is not going to rally versus the dollar, it may consolidate against the dollar. So very indecisive trades setting up right now. Like I said, we have our sell signal, so right now it's a bearish trade. But with the fundamentals, with the U.S. dollar, it's really tough to be short this market right now. So I think your range traders are going to swallow this up, especially if you're trading binary options at these levels. Like for instance, you would have, let's see, probably the 98.25 strike price here, and then you would have your 97. 35, or excuse me, 97.25. Yeah, your 97.25 and 98.25 binary options would be definitely, I would think, your selling points or your breakout, breakout points for any type of reversal of trend. So these middle points here, those would be the tough ones right there. But I think if you were looking for the range trade, you can be contained most likely in that area. So for directional cash and futures traders, obviously you adjust the futures for about 10, 12 pips, I think the spread is right now between the difference. But you use the last higher move high as your risk level. Any trading above here, you don't want to be short. That would be confirmed bullish strength for his back in motion. And how strong could that be? I don't know. We'll see. The way the dollar has been swinging right now and the way the stock market moves yesterday, anything could happen this afternoon. Remember, right now the currencies may be just in a little bit of a quiet state right now before the U.S. markets open, and see if we get another slamming to the downside. We are half an hour away from the U.S. Stock market opening. The rest of the world has been in. It's going to be very interesting to see what kind of a bounce we do or do not get with the U.S. equity markets. So we've done enough looking here at the U.S. dollar Swiss. Now let's go and look at something that is a little bit of a surprise this morning. So we have the British pound U.S. dollar, and you can see that this market is having a little bit of a stronger day than yesterday. It's slightly higher. It is looking a little bit bullish, staying contained in this neutral to lower range trade going on here. Our key pivots breaking out to the upside at $1.3070 would be a bullish indication that this is a neutral to higher trade again with the pound U.S. dollar. Any failure from $1.2848 down here will have us hard pressed down to this $1.2758 level. This is the line in the sand. This is the support that's been holding this sideways trade up now for 5 months, or close to 5 months. Now we've had quite some volatility, but as a whole, the pound has been really resilient and strong versus the dollar. So the question is, are we going to break out to the upside? Or are we going to break out to the downside? Once again, I think your range traders are going to clean up again in this market. I thought your trade would be over at the end of January. And in February, we've had a couple swings, that's for sure, but on a daily basis, actually, you've had a lot of really good opportunities versus the directional people that have been getting chopped up. Because this range is not very big here. It just looks big because of we pulled out the rest of the time. As you can see, as we tighten it up, the British pound's been trading in very, very tight ranges most days. Like here were this is the way the pound moves, and day swings like this, not in these tiny little things like that. That's not common to how at least it used to trade, that's for sure. Of course, there's a lot of new variables that cancel out the pound right now between the Brexit going on, the trade deals, and now we have the coronavirus, which obviously the pound is not, it's been very resilient at because they don't have as much of the problem as the rest of Europe. Good thing they're out of the EU, huh? What a perfect time for the UK to have left the EU right in front of the coronavirus, of all things. So, all right, now let's go see what's going on with the U.S. dollar, Japanese yen. We're looking for flight to quality here. So we see there's strength in the pound, which is one of the biggest currencies in the U.S. dollar. We looked at the Swiss, which we see that there is a little bit of strength there as well. Now we have the U.S. dollar yen, which it took a crack over the last two sessions. But look at what it's done. I mean, with the explosive rally that we had last week, it was not unlikely to have a move like this. Remember, we always reinforce this. Markets go out like they come in. So you can see how this exploded up and it came back. Now this is a good support area. We'll see what happens when the U.S. markets open. Remember that the U.S. dollar yen has been a bull no matter what the dollar has been doing. So if the dollar is under pressure versus the other currencies, don't expect this one to maintain the same. It's very likely that this market's going to make a run for $112, 220 or 225 up here for a breakout before it makes a test of this 109.51. Statistically, just right now with the momentum and all the technicals and fundamentals, it's very, very likely that this is going to occur. Not that it will. I'm not trying to say it's going to. I'm saying is that the odds are very likely that this is just an upside correction. Remember, we have to go with the fact that we've made higher move highs, higher move lows, and even right now this is a higher move low. So unless we continue to test support and then, like I said, come down to this 109.51 level, we're looking at making a higher move low, which then puts us in a neutral to higher posture. So I'd be very cautious if you haven't already been. If you're short, keep your stops tight. That would be my suggestion. I would be leery of being short against the high of today's session, which would be at 111.041. So yeah, any trading above that, reversing gears up through making higher move highs, is a really good indication that this is stamped in a higher move low, which then confirms what? A fundamental technical that the market is continuing its trend higher. Excuse me, as you make higher move highs and higher move lows, the trend is your friend and momentum is still to the upside. But as we said also, if we continue to test new or move lows, well then we are looking for it to slowly consolidate or grind its way down towards that 109 pivot. So we'll see what happens once the U.S. markets open. Now that we've looked at most of your major currencies versus the dollar, and we did this for a reason, is now we're going to look at the U.S. dollar. Now this market gave us a buy signal a couple sessions ago. Just like we had a sell signal in the Swiss, we had a buy signal in the Euro US dollar. And they're also that's a divergence of trading also for those two, for the European markets, which could also mean that when you have something like that we're really not going to get very much of a corrective move. What we're going to have right now is a consolidation phase arise, which means you range traders are just going to clean up once again in markets that have recently been trending very, very strong. So as you can see, the question is this upside correction going to continue, or is this just the basing before the market starts to test support once again? So there's a lot of fundamental factors that are looking to hammer the Euro US dollar right now. But once again, the question is how much of the Corona trade is the U.S. dollar bull going to ride? And with the U.S. stock market selling off like it did yesterday, a continuance of that may not necessarily be the best thing for the U.S. dollar either. So if the market starts to get hammered again, if you see the Dow down 700-800 points again today, and the S&P's down as well, well, that's something that's a whole nother factor, and then that's why we have different quadrants, like the interest rates, we have the currencies. When you watch these markets together as a whole, and when they start to make major moves, you can see how there's correlation trade. So while the stock market is bailing right now and starting to turn on support really hard, we know that interest rate activity and currency activity starts to churn up. So we'll see how this market opens and what happens once the U.S. markets are in full gear in 25 minutes. So we have a little bit of time. So let's get through this webinar and show you something else for a trade that you want to talk about. Monster of a trade. Remember yesterday we were talking about the US dollar, Turkish lira, and that was when it just had taken out the high from the previous session by just a little bit, and before it had rallied all the way up to where it did up on the high up here. So, and this is so funny because we were saying like it's so to buy into this market, it's just in a buy dip scenario, but you have to look for some big swings. Look at how we came off today. We corrected all the way back down here to the 6066 level. And this is our key pivot now for directional, for the direction right now. Anything above here definitely keeps this market in a bullish posture. And even if it fails here, I think it would just set it up for a corrective move down to about this 597.5 area right here. I don't doubt you're going to see, and plus this was prior resistance and our upside breakout level. I think this would be a very good support area if the U.S. dollar Turkish lira breaks down into this area, and if it does, I think that would be a fantastic corrective buy area, because this is a very volatile market. This is one that's tough because the spread is so wide. So if you're not on the right side of this one, you're wrong right off the bat, and you're just burying yourself on each trade. So you really need to pick your points with this one. We were looking at this yesterday, and boy, this is just nuts how it's such a tough one to get long on, you know. So we just have to wait and see for a corrective move. I think the overall dollar strength versus this market is kind of like the U.S. dollar yen. It is in place, and we just have to look for some volatility. And when you see support get hammered, expect it to be very volatile for a couple sessions. But look for those extremes, and if you can jump in somehow, and especially I think you have to look for option trades like that. If you can get any type of option trades off, that's probably the best way to trade this volatility, because the spreads are so wide with the underlying contract. Unless you're on some of the other foreign exchanges, I guess some of the other exchanges you can get, obviously out of the Turkish exchange and a couple other exchanges around the world, you might get better spreads than you would at some of the other broker dealers through the FX markets, or through the futures markets. So that's a really tough one with that one. But if you got the cojones for it, this is a strong bull, and this is the one to start to play with, because I think you're going to see a lot of volatility. As the coronavirus expands in the Middle East, this is definitely going to impact Turkey as well, because now we have Iraq, Iran, we have Pakistan, and the question is how much has it really started to spread through the Middle East, because the containment issues there are going to probably be very tough. So we'll have to watch how this manifests. You know, it's a terrible thing that's going on globally, but it definitely shows what happens in certain regions of the world when something like this does, and how it's definitely going to have an impact on the market. So expect a lot of trends like this bullish trend that started back down here when the coronavirus really first began. I mean, look at this. This is a very monstrous rally here. I mean, we've gone up from $5.80 up to $6. We're trading $6.13 right now. This is just in the course of this year, you know, I mean, just since the middle of December. So, I mean, you're only looking at 3 months of trading. That's a nice trend. And the thing is, this could still trend for the next 3 to 6 months, maybe even a year. That's a monstrous thing to look at. So just to give you a perspective on that, let's jump to a monthly chart real quick. Okay, so see, look at this. This has been trending higher for years now. And this has finally started to get a consolidated swing thing. But look at this. We're about to take out this high here. If we get above 626, there's a really good chance this market's going up to 7. So this is a big swing trade. So we'll be watching it. See if there's any dollar weakness. I would say you have to buy in the dollar weakness here. So look at this trade. If you got the balls, this is definitely the one to look at. So, but now we're going to get back to something a little more commonsensical for the rest of the trading community. So let's go to the U.S. dollar Mexican peso. And as you can see, this market has been in an explosive buy pattern today. Of course, you can see there's a lot of indecision. It's tried to make a nice rally. It tried to come down on this gap, and what do we got? Not very much. We'll see what happens today after the U.S. market's open. So right now, this market has been an overall bear. Don't get too caught up on this explosive rally here, unless this is now where the coronavirus may actually finally be tapping into the U.S. dollar Mexican peso trade, because they're coming into spring break. Who knows what kind of cancellations may be on the horizon. So our pivots are breaking out to the upside of this 1925 area here, and obviously down here, any trading back on these lows and any failure from 1851 really has this market hard pressed. And I think this is why you've had this explosion in the peso, because of a lot of the tourism that is now really getting jammed up around the world. Is this going to affect Mexico and the spring break trade, which is starting up in the next couple weeks? We shall see. So now let's go to the US dollar Canadian dollar, see how this is shaping up. All right, the U.S. dollar, Canadian dollar. We are in a little bit of an indecisive trade here, but we're riding the dollar bull. We've made a higher move high here a few weeks ago, and then at that upside breakout point at $1.3331 is our upside breakout target. Anything above there has us back on our rally train, which is targeting up to that 134.25 area longer term. I mean, we're looking for something that like that to manifest over a couple of weeks. But we had a lot of basing here. This market was really indecisive about trying to either rally or break, and it kept making newer move lows and lower move highs, and then we finally broke out to the upside yesterday, and now we have today's trading where we are, we're hovering below the highs. We're not really doing anything. I think we're waiting for the U.S. markets to open, and the question is, if the markets are lower in the U.S., and they get hammered again, it's a good chance that we may see a rally here in the U.S. dollar Canada. Not necessarily the dollar is going to rally versus other currencies, but there's a very good chance that we're going to see a challenge of resistance here before we're going to see a break. We have been making higher move highs and higher move lows on the hourly. Obviously, we've broken out into with a higher move high after a lower move low, which is neutral for the daily trade. So if we are staying neutral, well, then we're looking more at a consolidation day today, which I don't think we're going to have. I think we're going to have a lot of volatility in 15 minutes once the stock market opens. So let's go back to Europe, Euro, US dollar. Now, as we can see, this market is doing nothing. So the major markets are being very, very quiet, and we still have 15 minutes. So let's go see the Australian dollar, US dollar. Today we are jumping around a little bit just because we're looking for the trades and we're looking to see what's moving right into the pre-market open of the US markets. Okay, Australian dollar once again yesterday looked like it tried to set a base, and then you can see today we actually made a higher move high on the intraday level. Just slightly, but now we're hovering just below the or above the lows from yesterday. So this is a market that's really hard pressed. This 67.5 pivot right here, this is our upside breakout. Anything below here, this isn't a sell rally forecast. With the coronavirus still growing and the fears of it becoming a pandemic and everything else that's going on in the world, I tell you what, the Australians, they don't really have very much going for them at all. You know, I mean. And then, it was kind of funny. I saw my girlfriend watching The Bachelor last night, and I guess they're doing whatever part of it, or maybe it's all being filmed in Australia. And I was thinking to myself, I'm like, this is pretty bad when Australia has to rely on The Bachelor for marketing to try and get people to come to Australia. So I don't mean to mock the Australians at all. I think Australia is an amazing country, and I feel for what they're going through. So it's just very hard pressed for their markets right now. So with dollar strength also being something that seems to be kicking into gear on maintaining its foothold against this market, absolutely. I think you're going to see that See, that's why I was saying we are in the beginning of some very major trends. Look at this head and shoulders. We came down, we found our support right here, and then we were looking for this. Remember, we were talking a couple weeks ago. Here is your neckline, and we thought we had a shoulder here, we had a head here, and then when it was coming down here, we were wondering, okay, this is our question last week. We're like, if this market's going to bounce and if this coronavirus is going to subside and whatever, this is a head and shoulders, we would have been going this way. Well, you can see what happens when a head and shoulders fails. We took out the head and boom, now we're going this way. The trend is just hammering this market. So this long-term currency ride is still in full motion. A corrective move to the upside right now is long overdue. And even if it does start to get a corrective move to the upside, we see that only as a eventual potential selling opportunity. So we'll see how this pans out as the U.S. markets are 14 minutes away from opening. So another indication of this trade zone here is the New Zealand dollar, US dollar, which also has had a lot of trouble trying to find some support against the US dollar. In fact, I don't know what's going on. Here we go. So as you can see, yesterday the market had made like a double bottom here versus Friday and settled positive on the day, not positive versus Friday, but positive on the day. You can see how low it opened. And today, obviously, this was the same thing as well. Today we are heading on, laying on support. So support has been getting tested here for 3 sessions. The last 2 prior sessions, that's where we at least saw some relief and some strength, or at least looked like it was trying to set a bottom, which we have set a short-term bottom, obviously. The question is, are we just basing before we fall apart again, or are we going to get a rally? Well, this market also, I think, is hard-pressed. Our 64.88 pivot right here is our upside breakout and neutralizing of the trend, not making it bullish, just getting us neutral. And I don't think we're going to see that level for a while. And if we do, I think it's going to be a corrective move, and we're going to fall short. This is just the way it looks right now with the way the markets are shaping up. So we've covered Asia that way. We can see how New Zealand and Australia, these trends are very, very strong. We looked at the Turkish lira, very, very strong. Mexican peso, that's been trending against the dollar for a long time. It's starting to swing, which that market doesn't really move like that. Typically, that's a very big indication that something's going on with that one too. So we're showing you that we bounced around today just because there was kind of we started out with the ones that weren't really moving too much and too extreme, because the ones that we started out with, some of them were majors and some of them were lesser majors, but their extremes weren't that bad. Now you can see how we've gone to these markets and look at how they've been trending. I mean, if you're looking at this ride, anyone that got short this market just on a whim at the end of the year and just has been conservative in lowering their stops, well, they've been riding this one now for almost 2 months straight. This is a big deal to have a correction like this in a market that was in a very strong bullish market for so long. And even after, when we were here in January, it looked like we were going to still maintain bullish posture. And now look what's happened since. And this is the biggest move right here, is in February. This is downside move here is a big indication of the fundamental factor that is hammering this trend. So when you have an uptick like this, a nice corrective move like this, is it a basing? Is it a bull? And even if it looks like it's in a great area, no, it's just usually a marker of a good swing trade, you know. And when these lows do get taken out, every time we take out a lower move low, it continues really for a nice momentum trade to the downside. It becomes very hard to become a bull. And you can see any bullish attempt over the past 2 months almost, for the most part, even on bullish days, you were getting chopped up. So very, very keen insight that you need to pay attention to when it comes to this New Zealand dollar as well as the Australian dollar. That's why we bounced around today like this. This is to give us, we always use the best indicator for the markets is the markets themselves. And that's why we use the other currencies to give us an idea as well. So we analyze trade zones and also things like that to bring our factors together to give us a good cohesive view of what's really going on in all the currency crosses in the combined Forex market. All right, so we have 10 minutes to go before the U.S. market opens. The Euro-U.S. dollar once again in focus here. Let's see what's going on. Yep, it is quiet. It's like a little church mouse just, yep, not doing anything, just playing around. We're just looking at this little area where we've been, if you look at this, we've been trading around this area for quite some time. And this low that we set a few sessions back, this is a very good support area for the Euro-US dollar. The coronavirus is the big deal, though. We have Austria that has shut down trains moving in and out of Italy to Austria. And here, let's look at the US dollar Swiss once again. Let's see if this is going to give us... Now, we know the pound is firming up versus the dollar. Yeah, the Swiss is firming up versus the dollar, but only slightly. Yeah, it's very quiet. So I would be very leery of the trends here. So, you know, the other markets we looked at, see how those were extreme trends for the year. The Swiss has been in a sideways trade for most of the year. It's not even that lower. It's not that much lower versus the dollar, and considering that the fact that now we have a sell signal, which is making the Swiss stronger, you know, each day as we're ending the month of February, we're getting closer to unchanged on the year. That also shows you strength in the Swiss. So we'll see how this manifests today. I think we're going to have what happens today, actually, I think is a very big indication of what's going to go on with the currencies for the rest of the week, just because of the fact that we've started to pound, you know, and do certain things that we haven't done in quite some time. The stock market is now lower on the year. Let's see what kind of resilience is have. But also remember, the markets are forward thinking, so anyone that thinks that this is the end of the world and the sky is falling, no, it's not. The markets actually are due for a correction. So let's see how they absorb things as we set up our trading today. So, and by the way, don't forget to subscribe to our YouTube channel for Forex Trading Unlocked, and check out our website also, www.forex-trading-unlocked.com. And let's see, we have nailed our trade. So we had one other one to look at again. That's right, the U.S. dollar Canada trade. Let's remind you of this one. Remember that just like we had the movement in the peso, this one is setting us up for a bullish breakout here. So be very mindful of this as the trade unfolds today. If we take out the highs today, in fact, we're going to put this pivot in here for you guys that are intraday traders or daily traders looking for a confirmation of momentum. We take out the high from yesterday, I think we're going to be up on this $33.31 area in a heartbeat. So be very leery right now as this market's selling off. Remember, you've made a higher move high after a lower move low. This market is neutral to higher right now on an intraday and daily basis. So right now, this may be setting up a buying opportunity. I wouldn't necessarily say that's U.S. dollar weakness yet falling into place. So we'll see how this shapes up. We got a few more minutes before the stock market opens. Looks like we're definitely pressing this move here. Let's see if the bears can scare the bulls out of the market and really press this support down to make even new move lows. Who knows? But do remember, if you are a bull here looking for this breakout, make sure that you are definitely, if there's a failure here at $1.32 even, you're on the wrong side for sure. Be careful of that. And with that being said, we're going to jump back to our logo and say thank you very much for viewing our webinar today, and